editor at Trade Finance Global. Today we're at the EBRD annual meeting held in Yerevan, Armenia. Factoring is often underappreciated. It may not receive all of the attention that other trade finance products receive, but it's equally as important. In April this year, FCI released a preliminary world factoring statistics report showing a rise of 3.3% in volume for the factoring and receivables finance industry in 2023. This followed an astounding 18% rise in 2022. While the increase in 2023 was more subdued, the past 2 years have shown the importance of factoring in international trade. And we are here today with Federico Avellán Borgmeyer, Chief Partner Officer at EFCom, and also joining us remotely, Abdelrahman Elbeltagy, Islamic Factoring Specialist at EFCom, and Vikram Nair, CEO of Xilligence, to dive deeper into the factoring market, including some of those important growth regions, the importance of partnerships, and Islamic and Sharia finance. Everyone, welcome to Trade Finance Talks, and Federico, welcome.
Thank you, Deepesh, for having me here.
Such a pleasure. So to start off with, quick introduction, and here we are in Yerevan, Armenia at the EBRD annual meeting. Who are you, where are you from, and what do you do?
Yes, my name is Federico Avellán Borgmeyer. I am Chief Partner Officer at EFCom. We're a German company that's been in the market for some 25 years in the factoring space only. We've been in this space primarily in Central Europe, particularly in what we call the DACH region, Germany, Austria, and Switzerland. And that's been basically the focus until I joined the company. During that period of time, when I joined, we had identified that, as you know, the global market is about 4 trillion euro in size, an amazing number. And a large part of that is Europe, 70%, about 70% is Europe, 20% is China, and 10% is rest of the world. And we said, hey, this is going to change. It's going to change particularly in areas that haven't been in the focus at all. And we said, probably the regions that are going to grow are going to be outside the European context, and particularly Africa and perhaps the Gulf region, and one more, which I think is going to be one of the most exciting markets. It's the Indian market. So this is what we decided to focus on, apart from our core markets, in providing software solutions, not only in our core markets in Europe, but also in those mentioned ones, as I said, with the technology that we have been developing over the last 25 years.
Sure. Thank you very much. And just taking a bit of a step back, can you give an insight into what EFCom actually does?
You know, receivables finance in the broadest context, that means for us factoring and what we call supply chain finance. Some others would call it confirming. Some others would call it reverse factoring. It comes pretty much about to the same. Are instruments to finance particularly small and medium enterprises. When the company was set up in Germany 25 years ago, it started with no one less than, for instance, Deutsche Bank, Postbank as a client. That started from zero. After 25 years, that company is now at 60 billion euro in transaction volume per year. So what we have been doing is providing the technology to run a receivables finance business, whether it's factoring, whether it's supply chain finance in the broadest context. Since the industry has been growing, we've been growing with the industry.
Thank you. And so I guess beyond Germany and the DACH region, what are the current regions of focus? And I know you mentioned that, but can you talk about why that strategic growth and expansion, particularly in the MENA, GCC regions and India, is incredibly important?
of course. We saw that our core markets have been growing nicely, but we're reaching a mature stage. You can call maturity of market pretty much when you look at the percentage of factoring or receivables finance business done on a GDP percentage of a country. Take Germany for as an example. We have reached 10% of factoring volume basically out of our GDP. That means 400 billion euro out of the 4 trillion euro in GDP. That's a sizable number. If you take other countries in Europe, take Spain, for instance, even further, between 15 and 20%. For confirming and factoring. So in Europe, we have reached a certain level of maturity. Now, if you go in contrast into other countries, you could take any country outside Europe, in Africa, apart from South Africa itself, India, the Gulf region, they all move in a very low single-digit range. So we believe that within the next 10 years, all these economies are going to see a steep rise in development, particularly for one reason. And this is factoring or receivable finance has always been good in growing when the markets are uncertain.
Yeah.
And I guess, Deepesh, this is what we have a lot right now.
Yeah, very interesting, and we reported on it quite a lot, the counter-cyclical nature of factoring and supply chain finance, particularly during these very uncertain times. But I guess the market is very important, and it's quite nuanced, and actually factoring doesn't necessarily apply like for like in every market, particularly some of these new growth regions. Is Islamic and Sharia factoring important? Because I guess it's quite nuanced and quite different to supply chain finance and factoring as we see it in the Western world.
Correct. When we looked at the possible markets to look after, we said yes, the MENA region is interesting, but what makes the MENA region particularly interesting, or let's say also different from ours? Islamic finance is a different approach as we know it in the Western world. Though today, most of the finance done in Islamic countries or Muslim countries is Western style. It's moving in a tendency towards Islamic finance. And of course, in that respect, we said we have to provide a product that is appealing to the region. So this is why we liaised with institutions from the region, IOFI, for instance, out of Bahrain, and asked them, what do we need to do to become Sharia compliant with our products, so that they become appealing to banks, financial institutions in the region, being Sharia compliant. So we received a lot of information, developed the product, and the product is now ready for the market.
Thank you very much. And I'm actually now going to turn to Abdelrahman Elbeltagy, joining us also on Trade Finance TV. Abdelrahman, can you talk to us and give us a bit of an overview of the Islamic factoring market? And let's just go back to basics. What is Islamic factoring and Sharia finance, and why is it important?
Islamic finance is a financial system that follows Islamic rules that was told to us in Islam. This Islam law is called Sharia. Sharia at its core prohibits interest and prohibits any kind of gambling. And also it prohibits any uncertainty that may happen. That's called gharar. Also, Islamic transaction emphasize risk sharing between the financer and the financed entity, or whether it was an individual. Also, most transactions are asset-backed transaction. That's why if you looked at it, you find that it's a more ethical way of financing that aims for more productive financial activities as it focuses on real economy that cause economic growth. We at EFCOM, worked with a very well-known and experienced Sharia scholars and consultants in order to develop a workflow and a product that is a Sharia compliant one. Our new product followed the Sharia principles and accounting principles that was set by AOFI, that's the accounting and auditing organization for Islamic financial institutions. Our aim was to offer a new product to the market that would satisfy most of the needs of the clients. But at the end of the day, we can implement in our software whatever the Islamic product our client needs or they are already using. Because there are many formulas you can do it with, like Murabha, Mudarba, Musharka, and Wakala. Because at the end of the day, implementing a software, an Islamic product, is about knowing the correct workflow and what happens before what. That's why you can implement what your client need and tailor it in your software for them.
Thank you, Abdelrahman. And I think it's really important to actually look at why and how the Sharia law affects factoring. So now back to you, Federico. I guess going international requires financial commitment and oftentimes a permanent regional presence. And as a company born out of Germany, how do you intend to serve your international customers? So we talked about the strategy. What's the execution?
As you saw with Abdelrahman, we call him Abdel, we try to bring in, of course, core competence into our own company by having people, young talents in our own stuff. But we can't possibly do that for the rest of the world. So what we do is, and you know, my title is not Chief Sales Officer, Strategy Officer, Implementation Officer, Operation Officer. Now it's Chief Partner Officer. So the name says it. I look after partners around the globe that can help us to implement our strategy. Mm-hmm. And when we look into markets like the Indian market, for instance, a huge and dynamic market. We don't dare to say EFCOM is going to do that on their own. No way. So we look for partners, and so we found, for instance, one partner in the Xilligence company, and we try to grow the market altogether. So in a real win-win situation, we bring a ready-made, proven product. And Xilligence brings a lot of background expertise, being local, present, know the customers locally, and serve also our local customers afterwards. Because at the end of the day, we sell a product that needs to be served also afterwards, and our partners are there to do that.
Thank you, Federico. And actually, we've got one of your partners from Xilligence, Vikram Nair, is joining us too on Trade Finance TV. Vikram, can you give us an overview of the EFCOM partnership, why it's important, and what that's involved?
Thank you, Deepesh. To give a quick background about Xilligence, we started in the year 2000 in Toronto, Canada, and our main IT development and support centers are in India. At Xilligence, we provide product engineering services with deep expertise in cloud and mobile software development, as well as full spectrum QA and testing services with a focus on the banking and financial sector. We have offices in Canada, India, Singapore, and Dubai, where we service and support our clients across the globe.
Thank you, Vikram. And can you just give us a bit more detail on the India partnership, why that's important, and also where you see the future relationship with EFCOM going?
The reason why we partnered with EFCOM was because EFCOM is a clear industry leader in the factoring space with their software and solutions, and given our presence and experience in India and in the Middle East, GCC countries, we thought that there would be a seamless fit. So Xilligence already has several banking and finance clients across several GCC countries, so we are capable in supporting EFCOM in that region of the world quite easily. And in India, we have multiple offices, so we're able to support Indian customers seamlessly as well. And we look forward to a long and fruitful partnership with EFCom.
Thank you, Vikram, and great overview of that important 1.5-year partnership of a company based in Canada, but helping EFCom work on building its relationships, partners and network out in India and the MENA region. Now, Federico, I want you to talk to us a little bit more about the technologies. As you know, I'm a big technology fan, but I'd like to get into the detail. What are the really important key technologies that EFCom work with, and how is that impacting EFCom's factoring products?
When the founders of EFCom started the business, they pretty much set one direction, and the direction was going towards mass business. We know that factoring, residual finance in general, is a mass business. 4 trillion euro in transaction volume means a lot of invoices or receivables that need to be transacted. We're talking millions of invoices that go through our systems. And so what you need to have is performance. You think of a little bit of German technology, German cars. Well, we have performance. What we really do is throughput. We can handle massive amount of receivables. So this is number one. Number two is risk carrying. Because if you don't take care of the risk in your business, then you're in trouble.
Yep.
So performance, risk carrying, and when I came on board, I thought we also need to have something that's called scalability, because if we really want to bring on board all these new entrants, they're not going to purchase an application that's going to be like the one that's using Deutsche Bank right now, or HSBC, another. No, they will need to scale up from 0 to 100. So scalability, performance, risk carrying are elements that are very important. Now, what's the technology behind that we're using now since actually not today, when everyone talks about artificial intelligence, but this has been in our systems for over 10 years now. So AI is one thing, which is helping to improve productivity in our systems. And then we were using recently machine learning. Why is machine learning important? Because we're handling massive amount of data, and what we thought is we're now doing the job right, meaning we're processing all that huge amount of data. But the question is, are we doing the right job? Mm-hmm. Job right job. Are we doing the right job? And the right job is, can we go and predict the future? And we can.
Well, I'm going to stop you there, because that is my next question. But I guess if it is all about performance, risk carrying, and scalability, which I think is where the factoring industry is more widely, I'm going to ask you to step out of the shoes of EFCom, get your wish ball out, and look at the very fast-pacing world of factoring, and ask you, what do you think are the most exciting developments of factoring in the next, say, 6 to 12 months?
Where do we see the changes coming from? And that really happened when I was in Zimbabwe 2 weeks ago, where the African community met, and there were 250 bankers from the region, not only from Zimbabwe, but from the African region, Franco, Anglo-speaking, and so it goes. The interest for the product, the interest for doing it right from the beginning is amazing. So we see a huge hunger in implementing these new products, along, of course, with the instruments that are required with it. And we need to help, and all of us. I mean, that means also yourselves, because we have to help these markets to evolve quickly. So where do I think, or what's going to happen in the next 6 to 12 months? I think we're going to see a lot of drive from the new markets.
Yep.
And this is what will keep us busy
Yeah.
in the meeting in different places, because I think the markets are demanding it right now, very much so. Yeah.
Thank you very much. That was Federico from EFCOM talking to us on Trade Finance Talks TV here at the EBRD annual meeting in Yerevan.